ECB's benchmark rate is now at a record low, 0.5%. So should you adjust your fixed income investment strategy in light of the central bank's move? Let's ask Yannick Naud. He's a portfolio manager at Glendevan King. Yannick, great to have you on the show as always. Talk to me a little bit about whether this changes the game. It was so priced in, the fact that this would be, have happened.
Yes.
Do you just stay as you were?
Well, first of all, it was really priced in. I mean, the cut of quarter percent was priced in by the market, and in fact, the ECB should have done it much earlier because data coming from the eurozone, whatever it's the inflation at 1.2% or the unemployment going up every time was in fact the impulse to cut the rate. I think what was very interesting is the possibility of for the ECB to have a negative deposit rate. Back in March, it was really not, by the previous speech, it was really not in the card. And this time it was, Mario Draghi said it was a possibility, he was open-minded, and they were technically ready for that. And that's probably the biggest news, as well as the financing of the SMEs via asset-backed securities yesterday. And in fact, it is, I mean, we saw there's a big impact in government bond yield, especially the short-term government bond yield. For example, France, Netherlands, Finland now have a negative interest rate for 2 years.
Italy was below 1% in terms of that 2-year yield for the first time ever today as well.
Yes, Italy, that was one of the troubled countries in terms of refinancing, and now is able to refinance itself both in the short term and in the long term at very, very advantageous yield. If you look at the average yield within the eurozone, so if you weight every country by their GDP, today, for an average AA3 rating, if it was one entity, it would be AA3 with the average rating. The yield is 2.5%. So it is, I mean, we are witnessing a very, very strong move downwards on the average eurozone yield.
But is there any incentive to buy it? Because returns are small, I guess, and at the same time, we're not growing. So it's just all this cheap liquidity. Is it almost like a fictitious market?
Well, I think that it's not only, I mean, there's a liquidity coming from the ECB, but we should not underestimate the impact of the Bank of Japan. Bank of Japan have a very, very strong policy in order to, one, reduce their currency, and two, expand the balance sheet. If, for example, insurance company in Japan hold $3.3 trillion of assets. 20 years ago, 5% of those assets were invested in government bonds, both domestic and the JGB. Now it's 50%. If we start to see a shift of this money into riskier assets, whether it's Japanese corporate bond or it's in fact sovereign bond, but sovereign bond in Europe or in UK or in States, there will be, I mean, the amount of money are so large. There will be,
an effect almost.
Yes, I mean, and if France is trading at 1.7%, it doesn't sound a lot as a European investor, but for a Japanese investor, if the anticipation is that the yen will continue to go lower, it could be an attractive investment.
Yannick, what's your favorite play? I mean, you're a portfolio manager.
Yes.
What are you buying up right now? What should people buy? Is it corporate yields on companies that may be looking a little bit expensive equity?
Yes. Right now, within the sovereign eurozone country, we still favor Ireland and Portugal because the problems are well known and they're working through those problems. It doesn't mean by any means it's not a done deal. It's now it's expensive, so there's some risk involved. But I think there's a better risk reward to have some position in Italy and Portugal. In Portugal and Ireland than, for example, France or even Italy. Outside from sovereign bond, we think there's a value in corporate bond, both investment grade and high yield. You have to keep in mind that in May, for example, is the highest redemption of investment grade corporate bond this year. And so far, historically, companies are not issuing a lot of bond too because a lot of them are in the blackout period. Therefore, in terms of supply and demand, it's positive supply and demand. We like some corporate hybrid. I mean, corporate hybrid is the big thing so far this year. I think we had $20 billion issue since the beginning of the year. Not every bond are attractive. We don't like, for example, Telecom Italia, but we like Linde or RWE.
So you really have to choose.
And so you have to, in every asset class, and especially in corporate, you can't rely on rating agency. You have to do your own credit analysis, and you have to be able to do some relative value between asset class, because there is some value, but because the yields are so low, it's very, very difficult to extract.
Yannick, thank you so much for all of that. Yannick Naud, their portfolio manager at Glendevan King. Now coming up, Warren Buffett is weighing in on